Imagine waking up tomorrow, walking out to your driveway, and realizing the $60,000 asset sitting there is suddenly worthless. No warranty, no parts, no service centers, just a 2-ton paperweight. You think, that can't happen. These are massive companies. But that is a lie. In 2024 alone, we watched a $2.9 billion car company evaporate into thin air in less than 6 months. We aren't looking at ugly grills or bad interiors today. I ran the balance sheets, the debt-to-equity ratios, and the cash burn rates. The math says these 7 brands are statistically likely to be bankrupt, sold, or shut down by 2026. Let's look at the bankruptcy list.
The ghost of Christmas past. We have to start with the body that's already in the morgue, Fisker. This is your warning shot. In 2021, Fisker stock was trading near $32. By mid-2024, it was delisted and trading for literally pennies. They reported a net loss of $463 million in just 1 quarter. Think of Fisker like that friend who buys a round of drinks for the whole bar on a credit card he hasn't paid in months. They projected making 40,000 SUVs. They made 10,000. They couldn't sell them. Why does this matter? Because thousands of people bought the Fisker Ocean thinking they were early adopters. Now they are bag holders. If you see a Fisker on the used lot for cheap, run. But Fisker was a startup, so maybe that was expected. But what happens when a brand backed by the richest country on earth starts running out of cash? That brings us to number 2. Lucid Motors, the cash furnace. Lucid makes incredible cars. The engineering is brilliant, but the business model is a disaster. This is what I call the negative margin trap. For a long time, Lucid was losing over $300,000 on every single car they sold. Imagine baking a cake that costs you $10 to make and you sell it for $2. You aren't a bakery, you're a charity. They are burning billions annually. Yes, the Saudi PIF, Public Investment Fund, keeps writing checks, but even deep pockets have a bottom. With their stock down massively from its highs, the math suggests that without a miracle, the Tesla killer is just killing its own bank account. Lucid is bleeding cash, but at least they have a futuristic product. This next brand is stuck in the past, and it's currently being crushed by a mountain of debt that would make a college student cry.
The debt zombie. Nissan isn't a car company anymore. It's a debt servicing agency that occasionally builds an Altima. Nissan carries a massive debt load compared to its operating margins. While Toyota and Honda sit on cash piles, Nissan is scraping by with profit margins often dipping below 2–3%. When you have billions in debt and interest rates stay high, your profit evaporates just paying the bank. This is the too big to fail fallacy. We saw it with General Motors in 2008. Just because you see Altimas everywhere doesn't mean the company is healthy. It just means they were good at giving loans to people with bad credit, which is another ticking bomb on their balance sheet. Nissan is in trouble, but they might survive as a smaller company. However, our next entry is on an actual execution list written by its own CEO. Maserati and Alfa Romeo, the Stellantis ultimatum. Stellantis owns 14 car brands. That is too many mouths to feed. Their CEO, Carlos Tavares, recently dropped a bombshell. If they don't make money, we'll shut them down. Maserati sales are in free fall. They moved fewer cars in recent periods than some niche hypercar brands. They're trying to sell $100,000 SUVs with 4-cylinder engines to people who want V8s. The ROI, return on investment, for keeping these brands alive is turning negative. If you buy a new Maserati today, you aren't buying status, you are buying a depreciation anchor. If Stellantis axes the brand in 2026, your resale value drops to 0 instantly. Luxury brands dying is one thing, but what about the truck of the future? This next one hurts because we all want them to succeed, but the calculator doesn't care about our feelings. The Rivian, the WeWork of trucks. I see Rivians everywhere. They are cool, they are capable, but financially, they are terrifying. Rivian is still struggling to reach gross margin positive. That means it costs them more to build the truck than they sell it for. They lose tens of thousands on every unit. They have a cash pile, yes, but they are burning it to build massive factories for a cheaper model, the R2, that isn't here yet. It's a race against time. If the economy slows down and people stop buying $80,000 trucks before the cheap one arrives, the math doesn't work. Rivian is a maybe, but this final brand, this is an American icon that has already been hollowed out. It's practically a ghost. Chrysler is a company that sells a minivan. That's it. You cannot sustain a national dealer network, marketing budget, and corporate overhead on the sales volume of a single minivan model. The 300 sedan is dead. The brand has no identity, no volume, and no future product that can save it in time. This is the definition of brand equity hitting zero. The only reason Chrysler exists right now is nostalgia, and nostalgia doesn't pay the bills.
So, why does this matter to you? Because when a car manufacturer goes under, 3 things happen instantly. Parts disappear. Good luck fixing that sunroof. Warranties void. That 10-year guarantee? Gone. Value crashes. You still owe the bank $40K, but the car is worth $10K. Don't get caught in the trap. And speaking of traps, buying a dying car brand is a $50,000 mistake, but there is a much bigger trap waiting for you in 2026 that could cost you 10 times that amount. I ran the math on the real estate market, and the numbers are terrifying. Click this video right here to see why buying a house might be the worst financial decision you make this year, and what the data says you should do instead.